On the last week, gold traded as low as 1563 and as high as 1689. Plus, the numbers are rounded and the market is closed. And on the last trading session of Friday, gold printed a closing price about 1585. The numbers rounded and the market is closed. Gold is trading in a bull trend. It's now below the 20 days daily simple moving average and above the rest of the moving averages, and the momentum is weak. We are obviously in a correction. For the RSI readings, it's back somehow moderate in all the charts, 47 on the daily chart, 62 on the weekly chart, and 70 on the monthly chart. For the supports and resistance, the supports are actually all the area from 1550 to 1500 is supportive. You get 1550, then 1516, and then 1484. For the resistance, you have to go to 1610. If we are above that number with a close, then 1651, then 1689. That's all. We'll move on now to the economic calendar. On the economic calendar for the coming week and from the United States, we are waiting for the following economic data to be released. The CPI data, it will be released by Wednesday, and the PPI data, it will be released by Thursday. Then we have the imports price index and the exports price index, and maybe also the NFP on Friday. That's all for the economic calendar. We'll move on now to the trading strategy. Hi again. Gold have had a unique week, as all of you have seen. It started with a spike in the demand that took gold to nearby 1690, and however, as all of us have seen, global equities sank into a deep and fast correction, and there are some theories there on the market that margin calls forced clients or customers, or what they call them, traders, to liquidate anything they have into their portfolios to avoid or at least to meet their obligations. So that's maybe the reason for the sell-off that we have had last week. Now, whatever the reason for the sell-off is not that much important. Gold moved from 1470 to 1690. This is a big move, and it needs some sort of correction. So gold could climb further more to the upside. Market is full now of calls that says that gold is going to 400 or 1000, or I don't know. Some people are crazy. You cannot fix them. They are not meant to be in the financial markets, but whatever, part of the job. We got the central banks are ready to release too much money and rate cuts, and this environment is very bullish for gold. But for now, gold it needs to take some risk to fix this technical damage. Tune your ears to this phrase, a bubble that created a bubble. The first bubble is the stock market bubble. This bubble already burst. We all have seen this huge rally in the stock market, especially US market. This was not financed, let's say, sponsored by the Fed and the rate cuts and the liquidity going through the system. This created also huge demand for the US bonds or US debt as a safe haven. Now the Fed is going to cut more rates to save the stocks for sure, and this is going to burst the other bubble, which is the bond market. And by then there will be only one safe haven in the market left, which is gold. Let's focus on the short term. Technically, gold is weak. There is an impulsive bearish candle on the daily chart. So if gold managed to rise on Monday, Tuesday, it should be capped by 1610 to 1620. Then it has to continue its correction down to that supportive area I talked about, between 1550 and 1500. It could be a good buying opportunity, but I do advise you not to come close to the gold market for the coming week, uh, because it's still not clear yet what the cause of the sell-off, okay, and what the market is going to do the coming week. The market has, when it comes to commodity, the market has so many ways to play out a massive move like the one that we have had on the Friday. There could be a sideways trading to kill the time and to do the consolidation on, let's say, a lower levels, but without breaking them. So, for the time being, I would advise you again to stay away from the gold market for the coming week until the picture is more clear. Uh, on the long run, gold is good, and long run is not far from here. It's 2 3 months from here. Gold is supposed to have another rally that it could take it back to 1750 or even above that level. But for the time being, and considering the technical damage that we have had on the last trading session of Friday, I would advise you to stay aside of the market. Wish you all luck. I will see you next week in another video.